What do you make of the price action here today on the S&P?
It's showing some resilience here at support. There's no doubt about that. Last week when we were looking at it, it was right here in this little area where you had a nice little higher high, higher low, higher high, higher low, slowing momentum candlesticks. But this market is so news driven right now. It's so news driven it's almost like every single day, we get, $13 billion of tariffs coming into us from Canada, 50 billion coming into us from China, another 30 billion coming from Europe. And, we're making these announcements. Over the weekend, Axios released a transcript that was basically given to them by the Trump administration on us perhaps leaving the World Trade Organization, or a precursor to us leaving the World Trade Organization. So it's a very, very, very news-driven marketplace, and that's kind of what you're seeing right here with the volatility up and down, up and down. The market's trying to figure out how deep this goes. I heard today even that there's no point in the market going down. Trump's not coming off this trade war discussion, and that's a little concerning for me, obviously. But when you're looking at just the price action, and as a trader, that's what we have to look at. You're seeing slowing momentum on the downward movement right here. You're seeing volatility, but it is slowing down. It's currently sitting right here at the same support level at 2,700 that it kind of hit last time. It's also one of those significant whole numbers. I remember last week saying this thing could go down to 27 or up to 28, and that's kind of, I feel a little bit of the same this week. But now with it being at a major support level right above the 200-day moving average, I'm a little cautiously bullish coming into this week. And when I mean cautiously, I'm about as cautious of a bull as you can potentially get right now, especially when you're looking at the Dow Jones. Trying to find a way and fight back up above that 200-day moving average in the Dow. If it gets back up above the 200-day moving average and the S&P holds at 27, you still have the Russell 2000 showing strength. I'm still like the Russell 2000 this week. It's the best performing index over the course of the last 4 or 5 months. That is certainly in a bullish situation. And then the last one, when you're looking at the marketplace, looking at the actual NASDAQ showing some good resilience here at support as well at 7,000. Currently it's at 7,078. That is a very significant whole number, sitting right on that old support level from a couple months ago. So there's reasons to be bullish. There's no doubt about that. The market's bullish in the NASDAQ, the market's bullish in the Russell 2000. It's showing some bullish tendencies, more neutral in the S&P, and the Dow is still slightly bearish. So it's showing some mixed results here, but there is reason for positive bullish momentum coming into the week.
Well, the thing about it is price action is king. And as we look at all of the different indexes, I think it's telling us a lot. I'm with you, Matt. Cautious. There's no doubt about it.
Yeah.
As cautious as an old man lighting fireworks. I got to tell you that. I'm gonna make sure I take my precautions. I'm going to have my bucket of water right next to me before I do it. I will do it, by the way.
Yeah.
I am cautiously bullish. Here's the problem with any of that is the end of the day price action. And here we are, an hour and 50 minutes until the bell. And this last bit is going to be very important to me.
Mm-hmm.
Go back to the ES contract for just a minute. And I want you to zoom in on the candlesticks. I'm going to bring Jake in on this. Jake, you've been a trader now 6-7 years, I believe, quite some time. And you trade every day. You watch markets, you pay attention to them. How do you interpret the last 5 or 6 candlesticks in terms of tails, pressure, just the last week or so?
So the last week of trading on the ES and the S&P 500, I've been really keeping a close eye on the 269 level. It seems like it's finding a little bit of support there, and it's having a hard time pierce above the 272. So keeping a pretty close eye on that as we go into earnings. And today is the first day of the new quarter, and we're going into a holiday weekend. So volume should pick up today and a little bit tomorrow, and then it looks kind of sideways right now, neutral.
Yeah. Well, and I will remind everybody out there, Jake, glad you mentioned it. Tomorrow is a shortened trading day, for most equities on the equities market. Obviously, you have international markets and things, but I believe the market's closed at 1 p.m. East. On the ES, Matt, go down to a 1 hour or a 15-minute chart. And here's my thing, guys, with this one right here. look at how every time it's tried to have a relief rally in the last 2 weeks, it is finding support and it's establishing support, but support is ugly down here, right? It will rally off of it, and then it has been coming back down and testing it. This little relief at the back end of today, Matt, has got a lot of potential for a breakout to run. Could set up a good Tuesday, could set up a good week in the market, but there's no confirmation there yet, is there?
And there's no follow through with it. That's the problem we've seen in the last couple of weeks, ever since it's really been news driven. You look at this last week through this week, so we're looking at about 1 week of data here. Every time it hits 2,700, it does go back up. But every time it tries to get back above that 2740 level, which we've talked about 2740 being a very important number in the past, it fails. And so you're really kind of just sitting in that stagnant, sideways, neutral channel that is volatile. But because 2700 it has been so important to it, I think you could take a stab at it coming into the week. I just think you have to be very cautious. I still think you go into strength, though. I don't think you pick the bottom on the down. I don't think you pick the bottom on the S&P. I think if you're a buyer this week in the market, I think I have the exact same analysis this week as I had last week. I still like the NASDAQ more right now, and I still like the Russell 2000 more.
Well, and I was looking at, because it's the end of 2 quarters now in the S&P, first trading day here in July. Historically, has been a pretty good day, but not so far this morning. Mixed, getting set up for some support bounce here, but mixed. And I was looking at the first 2 quarters data for all of the different indexes, Matt. The NASDAQ and the Russell had a lot of relative strength, 7, 8, 9% up for the year so far, whereas the Dow and the S&P are relatively flat. Do you expect the NASDAQ and small caps to continue to lead if the market goes up?
Absolutely, I do. If the market continues to go up, first of all, it's those Russell 2000 stocks that are not going to be impacted by these trade wars as much as, say, the Dow 50, the Dow 30 stocks and the S&P 500 stocks. You got to look at some of those blue chip stocks. They do as much business outside the U.S. as they do within the actual U.S. And so they're going to be impacted a little bit more than, say, a Russell 2000 stock that primarily does business within the United States, doesn't have to deal with the dollar appreciation, dollar devaluation, tariffs and trade wars and trade agreements and all that. So I still like the Russell 2000 and the NASDAQ a little bit more than the blue chippers. And until that trend changes, I'm going to keep on saying that.
I have to acknowledge something here. We are live on Facebook at Trading Justice on Facebook. And Matt, I think we have one viewer on there right now. I know it's the first time we've done it. But Michael, good to see you.
I'll take one viewer.
Yes, absolutely. Good to see you, Michael, there. Michael Pacheco, actually from Portland, Oregon, good friend of ours.
Love Michael.
Yeah, all right. And actually, there's number 2 coming in here. We're gonna start building this. And in the future, if you're out there listening to the podcast on iTunes or in review, in the future, when we do our Skylines, we're going to go live on Facebook. So make sure you like us at Trading Justice on Facebook and find us there. Now, let's move on to the volatility.
We're also going to be doing that every day with the halftime report during the market at 12:30 Eastern Standard Time. We're going to be going live on Facebook to give you a quick update on the market, 10, 15, 20 minutes, just depending on it. Looking forward to that as well.
Well, think about it, Matt. We have so many tools these days to be able to connect with our community and our audience. It's a pretty amazing world that we live in. Let's move on to the volatility index. Let's talk about Vega right now and potentially even Volga.
You got to bring in Jake on this one.
I know.
You're going to make me talk about Volga?
Jake was subtweeting earlier today. Volga.
Jake, you're an options master. You use options on equities, ETFs, and futures products, I believe. Is that right?
Do it all.
Yeah. So how do you interpret volatility, and what tips can you give any trader out there listening about what to do with the VIX or Vega or volatility analysis?
Well, right now it looks like, because today's the first day of the quarter, it looks like there's a little bit of a protection.
Do it all.
Yeah. So how do you?
Do you still hear me?
I do, and I think we got to keep the audio on the Facebook part muted, Matt. We have a learning curve for sure. Anyway,
I clicked the button, and all of a sudden the audio started coming through Facebook, and it freaked me out. I'm gonna stop clicking buttons. I'm just gonna stay on toss.
Hey, don't be afraid of making mistakes, man. All right, go ahead, Jake. Back on volatility in Vega and Volga. I heard that term from morning. But anyway.
First of all, Jake, you got to describe what Volga is.
It's the Vega of Vega.
And what does that mean, Jake? A lot of people don't understand that the Greeks have micro Greeks, right? Greeks under the Greeks. Most people who see the Greeks see delta, theta, vega, gamma, and rho, but you're talking about something underneath vega called Volga. What exactly does it do?
Well, it just so there's three V's when it comes to those. There's Volga, Velga, and I always forget their sister. And they talk about the rate of change in which volatility moves, kind of like how gamma is the rate of change of delta.
Mm-hmm.
So that's kind of what Volga is for there. It's a pretty simple one for people who want to get very, very technical, and I like to do. But just to keep it simple, it's kind of like what gamma is to delta.
Mm-hmm. So gamma is basically the velocity of delta, right? How quickly delta changes from a $1 movement from 60 to 66. So if basically
that's got to be the quote of the day, because I have to cut in on that. When a new trader hears a veteran team like Matt, Jake, and myself say to keep it simple, it's kind of like the gamma of the delta. So I'm telling you, I'm sure there are people out there thinking, what are you talking about?
So what? They still need to hear it. You got to hear the word a few times before you understand it.
Okay? It was easier for my parents to think that I robbed cars for a living than understand what options were sometimes.
Yeah, it's true. That's true.
Yeah, no doubt. So sorry for geeking out a little bit.
So how are you reading volatility this week, Jake?
So I think volatility is going to pick up a little bit, not only because funds are going to start buying protection. So they're going to be buying puts. So if you look at the VIX, it's the call to put ratio spread of the 30-day contracts in the S&P 500. So I think they're buying a little bit of protection because we're also going into earnings.
Earnings season.
Yep. And it's going to be actually pretty big earnings because the dollar has been going up in price. And so you're going to hear a lot of earnings rhetoric about how the dollar is hurting price.
They're going to complain about it all. Every one of the S&P 500 companies are going to have bad earnings, and every one of them are going to complain the strength of the dollar. They did it in 14 and 15, and they'll do it again.
Which is great because that means there's going to be high volatility. That means there's going to be some option premium to sell if you want to. Yeah. Like quality stocks like Apple or Amazon's getting kind of expensive, but you can you understand what I mean. The FANG stocks, the volatility is going to start picking up there.
Well, I agree. And it is a good reminder that cyclically, when you're dealing with the 3-month earnings cycle, volatility does pick up about this time of year, but also just with the price action in the market. Even if you didn't have earnings season, I think volatility would probably pick up because there is some concern about what's going on. Support's got to hold. If that support broke, this VIX would spike like crazy. But you're right, Jake, higher VIX, better premium for selling. There's no doubt about it. Matt, let's move into crude oil. And interesting news in crude over the weekend. Our President Trump, called up the King of Saudi Arabia and asked him to put more oil out on the market. He tweeted that news to pick up for the slack from Venezuela and Iran, Matt. Oil prices did not
crude
sell.
Traders didn't care.
No, they did not sell.
They didn't care.
And bullish.
Yeah, it's bullish. There's no doubt about this. I mean, it came down, bounced off this trend line, and if you think about it, crude oil is one of the top tradable instruments in the world. Just skyrocketed up 10 points, about 12-13% in the past 2 weeks alone. It's been a great opportunity for you crude traders out there. You guys know how much we love trading crude for the last few years. It's an inflationary product, number one, which means as we print more dollars, crude has a tendency to go up. It's very, very news driven through Saudi Arabia, Russia, Syria, the U.S., oil production, whatnot. Crude has been just bullish upon bullish. The only time it's really had any degree of negativity was here coming into mid-May, but outside of that, it's recovered nicely. Now, I will say this, though, you don't buy after a run like this. Typically, that's not a good thing. If you didn't get in down at the low prices, it was getting back up above the moving averages, back up above the trend lines, you probably already missed the run a little bit. What I would do is wait for a retracement coming back down. And Tim, we've had this trend line here drawn on crude during the market Skyline for months now. That has been a very, very consistent trend line. I know it jumped under it for 1 day down here. Outside of that, it was just kind of hovering on that trend line. I'm looking for that to come back down into the trend line somewhere around 70, 71, maybe even $72. I'm looking at it in that $70 to $72 range and have it rinse and repeat and hit it again.
Jake, for the longest time, crude was your number one vehicle, if I'm right on that. Do you still trade a lot of crude?
Crude right now is in the penalty box because of how it's acting.
Yeah.
Because with the dollar strengthening the way it is, you think crude would come down a little bit because it's getting expensive for crude producers in the United States. But with the Iranian sanctions potentially coming back online, it's been kind of wonky.
Yeah.
And
It's
when
interesting.
you see a wonky market, you sit in the sidelines for a bit.
Well, I think that's an interesting thing right there, Matt, because I always, when I think of Jake Pelly, I think of crude oil, and so,
Natural gas, crude,
yeah, of
commodities.
course, commodities trader. So willing to put it in the penalty box when it's not correlated the way that it normally does. I think
Well,
it's smart. Shows a veteran trader right there.
it hasn't been correlated like that this year, right? The dollar's been fairly strong this year. Crude's been fairly strong this year. You still have some divergent material in gold and silver versus the dollar market, but oil's kind of breaking away from that, guys. And that's something we might want to be prepared for. I mean, as the petrodollar continually loses its importance in the world, as Saudi Arabia starts selling oil to China in Chinese yuan and Europe in euros and to Russia in probably still dollars. But as more and more countries kind of move away from that, and as we become energy independent, crude might stop being as divergent with the dollar as it historically has been. That is something we have been seeing. But I will say this. I love what Jake said. When Jake said, you know what, it's been a little wonky, right? That's a Jake Pelly word. It's been a little wonky. But the reality is, regardless of whatever the economics, the fundamentals, or the technicals are, if you're looking at something and it does not make sense to you, you have to have the ability to come off that. You can't continually try to force something on the market if it doesn't make sense to you. Wait for it to set up, and then you can go back into it.
Now that you just reminded me of one of my favorite words in my vocabulary. You ready for it?
Yeah.
Ski wampus.
Ski wampus.
Little ski wampus. Yeah.
Ski wampus.
I like it.
Little ski wampus.
Let's go on to gold.
Ski wampus. Okay, I got that. All right. Gold and silver / GC. So let's look at gold contract first.
I think for context on this one, Matt, pull it back to a 3-year weekly because it's so hard to know where this bottom is. It's in a downtrend. People keep asking me, where's the bottom in gold? Where's the bottom in gold? You don't try to catch a falling knife. There was a great blog on tackle trading. Until you get confirmation, don't try to guess. And 1250 has the potential as a zone here, 1240, 1250. But in my estimation, Matt, that thing looks like it's heading to 1200 and continues to show weakness, maybe even lower, quite frankly.
Honestly, I'm seeing a real big M formation on a weekly chart here.
Yeah.
And a real big M formation on a weekly chart is never a good sign. You could typically expect it to bounce off the M, the bottom of the M, which is support here at 1240. You could expect it to bounce maybe off that just a little bit. You can expect it perhaps to bounce off the 200-day moving average on the weekly chart a little bit, but it's got so much momentum to the downside right now. It's just getting absolutely butchered. Catching a falling knife is exactly what you're doing. And like our old man used to tell us, Tim and Jake, Dad said to me and Tim growing up, hey, listen, you never catch that falling knife. You let that knife hit the ground first and then you pick it up. And right now, there's no sign of that. You're building momentum into support. You're not showing slowing momentum into support. If it does break that level, you're easily looking at 1200. 1200 is a major level of support for gold, no doubt about that. Underneath, you're looking somewhere around 1130 on the gold contract. But I don't see this stopping just because it's setting a support level. I see this continuing to move down.
Jake, what's your take on this one? Obviously, very impactful commodity here, one of the biggest metals in the world, if not the biggest, and probably one that you focus on and trade. What's your take on gold?
So they say when you get a room of analysts together, no one can agree. Well, I completely agree with you. I think gold is going to drop here. So I'm on the same page. I'm really watching gold cautiously, and you were really smart to pull up the 3-year weekly because I'm looking at that same chart. When you pulled it up, I was like, hey, they have the same levels I have right now.
Yeah. That's what technical analysis is, though, Matt. I mean, when we're all looking at the same thing and it's mass psychology playing out on a chart, that's why it works.
Yeah.
And something to think about is when you look at gold depreciating the way it is, you also want to look up for a nice setup for depreciation in the miners as well, because we have a dollar strengthening and a commodity weakening. What does that mean for people in the United States that are producing that gold? That means that gold they're taking out of the ground is worthless, and they're paying more to their employees to get it out of the ground.
Interesting. And GDX is actually in a better bear retracement setup than the gold metals price itself, Matt. There's a big one on our Tackle 25 as well, which would probably have some caution to it, that Freeport Macmoran. We love the company, love the fundamentals, but it's a good reminder when you're trading. It doesn't mean even a system like the Tackle 2025, you don't trade it every month or every week. You trade it when it's ready. A lot of action, obviously, in the metals market. SI, Matt, I do want to take a peek at that because it has held relative strength against gold for some time, but it is also now breaking down, recent breakdown from that 1625 level. So could be following it right down the
same thing. Looking at support here at 1575, looking at the 3-year weekly chart. If it breaks this level, easily it could get down to 14. Easily it could get down to 14. And kind of what I'm seeing here, if you'll just give me a second, let me pull up a little bit of a longer time frame. History is a very good barometer of the future. And so if I'm looking at a little bit of a different time frame here, and you're seeing how right here on silver, it was kind of showing a little bit of sideways action. This is back in 2011, 2012, coming into 13. People were saying at the time, oh, it's double bottoming, it's going to go back up. And I still remember putting it out there saying, nope, 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 nope. Dollar's showing a lot of strength right now. Don't pick the bottom. Watch for it to come back down. And you saw it just continually just got smoked over the next few years. I'm seeing a little bit of that same type of situation here where you have a decreasing resistance levels and you have a horizontal support level. That is a technical pattern called a descending triangle with the probability that it should continue to move down. It's got momentum going down. Nothing would shock me in this news-driven market. And that's the one thing I think we all have to understand. That's the disclaimer I'm going to put out there, is that when we're putting out projections based on technical analysis, there are so many variables from a political to a geopolitical to an international perspective right now that anything could be impacted in a very short time frame. But from a probability perspective, those things exist every single day. Every day an instrument is being traded. I'm looking at a descending triangle, horizontal support. You got support level right at about 1540 as well as 1585. Look for those levels. If those levels are broken, then it's looking at about a $14 price range on silver. And at that point, we'll analyze it there. But for right now, I'm not worried about my long-term physical holdings. I never care about that, okay? But from a trading perspective, it's our job to make money. That's what our job is. And right now, that's going to be very, very difficult on the buyer's side from gold or silver.
And let's take a peek at the dollar. Biggest actual product in the market. We might want to start with it first each and every time we do the Skyline, but we have our process and we're going to stick to it. The dollar's been the story, Matt, for so much of the stuff that we're talking about because of the strength in the dollar. Good green candle today. 2 more rate hikes expected this year from Jerome Powell and the Federal Reserve. I think a lot of people are looking at this as a safe haven investment, somewhere to park your money. Weakness in Europe, things going on internationally, the dollar continues to trend. Jake, I'm going to get your take first because you referenced it earlier with the dollar strength. You were expecting different reaction in crude oil. Do you think this thing can break and run in the back half of this year?
The dollar?
Mm-hmm.
Oh, yeah. I think the Federal Reserve is not only reducing their bond position, but the U.S. Treasury also wants to reduce dollars in circulation as well. So what does that mean? Scarcity, supply, demand.
Yep.
Easy as that. That means there's going to be less dollars out there, so the demand is going to be higher for them, so the price is going to be higher for them. Higher premium.
Jake nailed it on its head. There's nothing I can say on top of that. 2 rate hikes expected this year. They want to unwind their balance sheet. They want to unwind the $4.5 trillion in bonds they own. Scarcity, it's supply and demand, it's economics. Dollar should rise, putting even more pressure on the commodities.
And take a look at Bitcoin, Matt.
Well, Bitcoin had a good day today. Little gap up action.
Well, yes, it did have a good day today. I got to know, Jake, do you invest in Bitcoin, do any crypto stuff?
I actually follow cryptocurrency pretty heavily because I watch the dollar, and the amount of liquidity in currency is correlated to the price of cryptocurrency. So as banks start cutting back on currency out there, meaning less liquidity, it's actually bad for cryptocurrency. Mm-hmm. So it's something to think about. I mean, look at when it was at $1,900 and then all of a sudden, we're going to start running our balance sheet. And then the ECU, the European Union, talked about maybe cutting back on quantitative easing there as well. And then Bitcoin kind of dropped.
That's an interesting point. So correlation to the amount of supply of money out there, as they're pulling back on that internationally at the U.S., just what we said about the dollar, you think that's a big reason why cryptocurrency has been hit hard?
Yeah, I think cryptocurrency is continuing to be weak here as central banks reduce the amount of currency, because you got to remember, it pushed people into kind of alternative investing when they started just producing tons and tons of money. Because you see a lot of these documentaries, oh, hey, cryptocurrency is a place to be because of what happened in 2008 because of TARP. Well, then if that's the case, then the inverse must be true too.
Yeah.
Hmm. Well, I mean, from a price action standpoint, Matt, obviously a big green candle, but underneath the moving averages, so much news in this space pretty much every day. It's always in the headline, and it does not go away. Even people who don't invest in crypto, they're talking about it still. Do you expect Bitcoin to have any kind of recovery here, Matt, in the short term as it's unwinding this downtrend?
You're always going to have people that want to pick the bottom. It got underneath 6,000 very, very briefly before it responded back to 12. I don't expect anything like that today. It gapped up into resistance. It gapped up into that same levels that it was kind of hovering last week. There's nothing here that makes me want to do anything, Tim.
Yeah. And by the way,
the average cryptocurrency year to date, guess how much it's down? The average.
oh, it's got to be down 100%.
Well, no.
70%, I should say.
65%.
70%,
The
yeah.
average, we're only 6 months into it, guys. We're at the midpoint point here. It's July 2nd.
I'd have to point out, you should have teased me a little bit more for that, because if something was down 100%, it literally would have gone to zero.
Yeah.
So my math skills were not on point right there.
No, they weren't. Literally, Tim just said that every cryptocurrency has imploded this year and they're not working. That's what Tim said. But no, they're down about 65, 63% year to date on average. Some of them have been just absolutely butchered, like Ripple and Ethereum just getting absolutely slaughtered. Bitcoin's down about 66% year to date. I don't know of one cryptocurrency that has actually showed a profit today, year to date so far. At some point in the future, maybe there is a really, really good buying opportunity here. But you don't pick the bottom, and you're not the first one to buy into it, because you're going against everything fundamental. You're going against everything economically, and you're going against everything from a technical perspective. So if anybody tells you Bitcoin down 65% is an opportunity to buy, they're lying, because it's not yet. We got to see price action slow down, got to see the negativity slow down on the crypto market. And you know what? It would not surprise me to see them even come down even further. Maybe not 100% this year, Tim. But it's still.
Well, some of them will actually. I mean, that's one of the risks in crypto, is that some of them will not exist in the future. So many new coins come about because new tech is replacing old tech, and it makes you wonder about the validity of any one of these, quite frankly. I had a really interesting conversation with friend of the podcast, Jake Larmore, over the weekend about that. And I mean, some of them will, Matt, go away. There's no doubt. By the way, we've got some questions in our live Facebook if you want to answer them now.
Yeah, let's answer them.
Like it. Yeah, let's have some fun with this. Adam Barr asked, what's your favorite for gold ETF? Covered calls have kind of dried up a bit on GDX.
Looking at GDX right here, they have kind of dried up, no doubt about that. I mean, if you're looking at buying a $22 stock, selling a $36 call option, you're getting less than 2% on that, no doubt about that. GLD, you're looking at the exact same thing here. If you sell that 0.38 delta, you're getting less than 1% on GLD. Neither one of those are worth it to just go do the ETFs on GLD or GDX. But if you look at some of your actual individual miners, take for example FCX, which is on the Tackle 25, $16 stock gain 66 cents on that. That's still around 3.54% on the ROI on FCX. And so, yeah, I get it. FCX down a little bit year to date, still doing better than gold, doing better than the miners, and doing better than silver or GLD, still getting a pretty decent premium on it. So that's where I'm looking at right now. If you're looking at getting anything on gold on the covered call, look at FCX, look at something like that. And if you're into like a more of a veteran type situation.
Adam's a vet.
Yeah, Adam
You,
Marius, no doubt
yeah,
about that.
yeah,
You can certainly look at the futures market, look at somewhere around a 10 delta, maybe a credit spread, maybe a naked put on at 1200. I wouldn't do that naked put on this in any capacity because of the volatility to the downside, because of
yeah.
the projection. I think you're going to get your ass handed to you in that capacity. But if you're looking for something simple, I still like FCX from a cover call perspective.
Well, and I'll give you one other idea there, Adam, to piggyback Matt. You know, when the premiums dry up on something, consider using a time spread because then you can buy the long-term equity or leap option. I'm not bullish on gold right now, so it's tough for me to make any kind of argument on naked put cover call until we
Yeah.
get some better price action. And it does tie into another question Michael had here is why does gold GLD seem to follow GC but not GDX? And that one's simple, just like Matt talked about here, Michael. Okay, and one last one. Oh, I think we actually are good there. Jake, any other ideas on GLD? Because I think a time spread could work. You could do a double calendar or something, pick up premium.
That's true. Or you could, if the premium was there, you could sell maybe like the 17.5, and maybe you want to buy some downside risk too. You can buy the 15 with the premium that you get from that FCX trade that you have right there. So you can sell the covered call, buy a protected put, and
Call it a trade. Does make sense too.
and you have protection to the downside and upside appreciation. So
I love it. All right, guys. That's it for our market skyline here. For all of our friends who are on Facebook Live with us, thanks for joining us. We're going to be doing a lot more of this as we move forward.